businesses kind of with their financial needs, and you're doing it in a really cool way. You know, a lot of the big national talk is about taxes, right?
Yes.
And a certain tax returns, waiting to see them, and all that stuff. But you like to come in and evaluate a corporation's kind of tax situation and financial overview. So let's talk about how this has kind of come about and where the focus. And again, I want to say that he can handle all of your personal needs, but let's talk a little bit about the corporate side of things.
Okay, well, I think it's important to sort of talk a little bit about my foundation, how I started, and what made me have this love of helping people.
Of course.
My wife, Mariella, started a home care company called Always There In-Home Healthcare in Mount Laurel about 11 years ago. And the whole focus of that, obviously, is helping seniors and helping families. And during the course of working with her and helping her, she ran the business and I helped with some marketing, but also went out and worked with families. You get exposed to their needs and what really drives them and the pressures they're under at that particular time in their life.
Right.
Well, they also are business owners. Now all of a sudden, they know how to run a business, but now all of a sudden this other thing has happened to their life. And, you know, what are we supposed to do here? Do we save for it? Do we plan for it? And the reality is that most people really don't do a great deal of planning.
Right.
All right.
And that's the problem.
And that's a real problem in our society.
Yeah.
Okay. So what I try to do, both in my corporate experience and also in the personal experience, is focus on one thing. I talk to them about, we want to protect what you have first.
Okay.
That's the most important thing because, you know, what do you think your most valuable asset is for you?
Well, it should be your home, right?
No, it's your ability to earn money.
Oh, wow, of course.
Because once you lose
without that, right?
Where's the home go?
Yeah, you're right.
All right.
Okay, all right.
So we start down at the basis because most people don't do that. And I'm not here to talk in a negative way about the way other people do financial planning.
Of course.
But what I do is I first look at, you know, what's your income? How much do you have to protect? How much do you need of that to make sure everything happens right in your life so that if something comes along and you can't work, you have an insurance product or some product to help you maintain that lifestyle?
Yeah, I mean, this is such a great approach because all I hear about all the time is, oh, you need to get more aggressive and you need to go after this fund or this whatever, and that's not the right approach.
No, you have to look at it like a pyramid, okay? So the pyramid is the bottom level of this pyramid. This is your own financial protection on what you have right now.
Okay.
Right? And then once you have that in place and you're comfortable that you have it, so, you know, you're walking down the street, you fall, you hurt, you're out of work for 3 years, you have money coming in to pay all those bills.
Right.
All right?
Right.
You have that taken care of. Now as we move up the scale, we look at, well, what are other things that are important? Well, the life insurance comes into it. And everyone looks at life insurance, oh, I don't need that because of whatever reason, but they look at it as a death benefit.
Right.
Where it's really a living benefit. All right?
Right.
You have to look at life insurance as that one product that will grow tax-free and you take the money out tax-free.
Right.
So you have this 401k in the corporate world.
Yes.
That's going to be taxed when the money comes out.
Yeah.
All right? The insurance isn't. So when you get to the end of your lifespan where you're going to be retiring and doing things, you take money out of your 401k and these other vehicles first, and you have this life product continuing to generate interest and grow and grow.
Right.
And when they're exhausted, now you have this other vehicle that comes out tax-free. It's a balance.
Okay.
Okay. The other thing that's important about that, it's not affected by the market. So now we're sitting at what, 18,000 with the Dow.
Right.
All right. We all expect a drop.
Yeah.
We don't know how much of a drop.
Right.
I can't predict it. You can't predict it.
Yeah, we
right?
were watching last week, right?
Right.
We were like, oh, what's going on here? Yeah.
And it did drop when Trump was elected. Then it went back up again.
Right.
Now it's on a like a trajectory where it's going to go through the roof, right?
Yeah. Right.
Well, we know it's going to drop at some point in time because things happen. We have zero interest rates.
Right.
Well, what happens then is if you have money going into something that's grows tax-free, and you can take the money out anytime you want, like 2 or 3 days, and you have enough in there, when that drops, you can take that money out and put it into the market.
Right.
All right?
Okay.
And have it grow, and still pay your premiums and pay that money back, and now you're back up to an even scale. So you've got a nice balance, but you have a bucket, and I call them buckets, that is untouched by the market.
Okay.
That's very important to have
Yeah,
that,
because
right?
because if you're only focused on what the market does,
Right.
you're subject to the ups and downs.
You're-
There's just as many downs as there are ups, folks.
Yeah, you you're going to Vegas.
Right. You're gambling.
Right?
Exactly.
You gamble.
Okay.
And again, I go back to the protection piece. We don't like to gamble. All right.
Right.
Now we take it up another level. All right. We're now to a point where you look at retirement, you look at 401ks, you look at all these items there. You look at your kids; they're really young. I don't know if you have young children.
I don't, but that's okay. We can
right?
work with that for this scenario.
We'll look later. All right.
Right.
All right. If you have a child, and it's 1 year old or 2 years old, why would you buy a life insurance product for a child? Why would you buy? Well, because one, it doesn't cost very much.
Right.
It's a whole life product, and when they turn 18, I just did an illustration. A woman's going to have $51,000 of cash value in for that child at 18 years of age. Now, no one can tell me what it's going to be like to borrow money for college at that point in time.
Right.
But I can tell you that community colleges are going to cost less.
Right.
So here's a child who has money put away that, again, grew tax-free, comes out tax-free, and doesn't count against any money they would borrow for money through any of the government programs that they have.
Really?
Yes.
Okay.
That's a big plus.
Yeah. It really reduces the risk.
That reduces the risk. And now all of a sudden you have a situation where your child, if they're incredibly bright or an athlete and they get a scholarship, wonderful. You have extra money as they go through college, right?
Yeah.
But if that doesn't work, you can use this money for them to go to a community college for 2 years and then borrow money just on 2 years.
Right.
Reducing their overall costs as they move forward.
Yeah, I mean that's such a great plan. I mean you could apply that to a trade school. You could anything really.
Well, they're going to want a car. We know that.
Right, of course, of course, yeah.
So you got to get in their head no car.
Yeah, but that's really it's a cool approach, right? Because I think a lot of people would think like, oh, life insurance, I'm not going to worry about that, right? It's just something I don't need.
Right.
But it could be. You talk about the different vehicles. It could be a vehicle that could really help you without, again, putting out much risk. It's all that risk reward thing.
Right. It's all about managing your risk and investing in products. And when I say investing, putting your money in products that are going to give you a return regardless of what happens in the market.
Yeah.
Right. And that's really what I focus on. And then that's with a family. But if you look at a company, what I do there is I walk in and we sit down with the CEO and we say, listen, let's look at your tax returns for the last 2 years. All right, what do we have here?
That's a good snapshot.
That's
last 2 years.
What you do? Take a look at it. Now, I work with a lot of CPAs, all right, and lawyers. So I'm not here to say I'm an expert in that area.
God bless you.
Okay? All right, they're tough guys to work with,
Yes,
but they're very necessary and they do a great job.
Of course, yep.
So I tell them right up front, your CPA is a really smart guy. He does a great job. But at the end of the day, when you look at tax returns, if your CPA isn't really digging in there deep and looking for every little thing, and sometimes they miss stuff, all right, it's always good to have another set of eyes.
Of course.
So I can provide another set of eyes that can work with their CPA to really maximize the amount of money you can get back.
Okay.
And what we've been able to do with companies we've worked with, up to, I guess, last month, we've worked with over 130 companies. We've gotten back over $4 million
Wow.
from the federal government that they can now redeploy in their business.
Wow,
right?
that's a big number.
Now, I do that for free. I don't charge for that. All right? Here's where I make my money. Because everyone says,
yeah, we
what's the
need
catch?
to know. Yeah,
What's
we
the
need to
catch?
know.
All right?
Yeah.
The catch is this. I tell the CEO, we're going to get money back for you, okay, if it's there, all right? But I'm going to ask you that up to 30% of that money, we redeploy to make sure that you have all the protection in place for you and your family and your company. That could be a long-term care policy. That could be long-term care insurance.
Right.
That could be a variety of different things.
Right.
Okay. That we take this piece of money, 30%, and then there's a small percentage, obviously, to get the money back from the IRS because you got to pay hourly for the accounts to do their work.
Right.
But the rest of it, typically around 60%, goes right back into his pocket.
Yeah, I mean that's a really big number. That's a really big number.
And think about it. He really didn't pay anything for that.
No.
All right. So
he just readjusted his books, basically.
He just really took advantage of things that maybe they didn't take advantage of
before. Right.
And there are two kinds of accounts I work with. There's those that say, "Hey, listen, I do everything perfectly, and don't mess with the books. I did it perfectly."
Right.
And then there's those that say, hey, listen, if you can help my client get more money back,
right,
that's what we want to do, and let's work together and get it done.
Those are the guys you want to work with,
That's
right?
the guys I want to work with.
Yeah,
you know?
definitely.
Because this is not about ego. It's about doing the best thing for your client always.
That's it.
All right.
This is Joe McCarrie. You got to be paying attention right now because he knows his stuff. This is great stuff. You know what I did? I ran over a break.
Oh.
Because, no, you're good. You're good. I ran over a break because I didn't want to stop because it's just too good.
Well, let's get coffee and we'll come back.
All right, that sounds good. So here's what we're going to do. We're going to take a quick break here on Morning Coffee. We're going to go get some coffee, and then we're going to come back, and we're going to talk a little bit more to Joe McCarrie about all of this great financial advisor and financial planning stuff. You got to stay tuned, folks, because we're going to be right back here on the Radio Vision Network. Stick around.
When it's time for Jersey Mike's to give a sub some sizzle, this is the way. The way it's always been. The way it always should be. The way it always will be. Because that's just the way it's supposed to be. Jersey Mike's. Be a sub above.
My dream job is to run and manage my own spa one day.
To be the general manager for the Jumeirah Hotel in Abu Dhabi, Dubai.
I feel that Mercier has prepared me very well for my future in the hospitality industry.
The kitchen is incredible.
You are planning the meal, doing all the costing and the recipes. You're in charge of everything going on in the kitchen.
They really do get you prepared, and they want to make sure that you have a job after college.
When it comes to injuries,
they're not all created equal.
That's why at Performance Spine and Sports Medicine,
our team of doctors will coordinate and customize your care
to provide the best treatment options using the area's most advanced medical technology.
All with one goal in mind.
To get you back in the game.
We call life.
Pain-free.
Drug-free.
Surgery-free. That's what we do here at Performance Spine and Sports Medicine.
Get better faster.
Stay better longer.
Saving your business money is as easy as 1, 2, 3. Tanker Consulting Services, a payment solutions expert, will show you how with a free, detailed, written analysis illustrating your cost savings. We usually uncover savings between 10 and 25%, and sometimes more. We can help your business succeed by providing reliable and secure merchant payment solutions such as merchant services programs, point-of-sale systems, and ATM machines. TCS, one of the leaders in regional credit card processing consulting, offers electronic payments to merchants locally and nationwide through our preferred vendor programs. We work to keep business costs down with a comprehensive suite of quality products, services, and customized credit card processing programs exclusively tailored for your company. TCS is convenient, reliable, and innovative, with customer service available 24/7, 365 days a year. Our in-depth industry knowledge, partnership strategy, and innovative processing solutions allow for a specialized approach to providing merchant bank processing with 100% full fee disclosure. TCS is one-stop shopping for all your merchant services solutions. Our clients save money 100% of the time. Trust Tanker Consulting Services, the knowledgeable, professional, and friendly provider of secure payment services. We set the standard by which others are measured. Call now for a free written analysis. 609-922-0201.
Today's show has been sponsored by More Than Gifts. Come see our new location in Marlton, New Jersey. Not just gifts, but more.
Welcome back to Morning Coffee, everybody. We're right here on the Radio Vision Network, but of course you already knew that. I am Mark Cook, and look, it says it right there at the bottom of the screen, so I've got to be, right? It's perfect. We're continuing our conversation with Joe McCarrie. Now look, I want to give you the information right now to get in touch with him, okay? This is his cell phone number, and he said, look, it's the personal touch, right? People can call me directly if they have any questions about anything that we're talking about. I'm going to throw you the digits right now. It's 856-206-2733. Got it? 856-206-2733. Give him a call. He'll be more than happy to answer all of your questions. And if you don't feel like picking up the phone, shoot him an email. Nice and easy. Joseph_McCarrie at Devon-financial.com. And you can see, Joe, look, like right at the bottom of the screen there, It's Joseph McCarrie.
Yes.
So we know how to spell it.
Right.
You just put the underscore underneath in between.
Right.
And then it's at Devon-financial.com.
Exactly.
Nice and easy. So we were talking before the break about how you need to build your financial foundation, right? You described it as a pyramid. You know, back in the early 2000s when I was banging around the economics halls at Rowan University, they used to talk about it like building a house, right? Because you got to make sure that your foundation is strong.
Right.
Pyramid is the same.
Right.
It's the same type of
Right.
scenario, right?
Right.
So let's talk about the mistakes that people made when they're trying to build that foundation, because they try to prop up these different things on top of a weak foundation, and then they're frustrated because they're not experiencing the growth that I think that they anticipated.
Right.
So what are some of the mistakes that are people making there?
Well, first piece, as I talked about, is protection. You want something there that if you are injured or hurt, and you have to be careful here. Sometimes companies provide a policy that if you're hurt, but you have to look at how long that lasts.
Is that like a workers' compensation
Well,
policy?
workers' compensation runs out after a period of time, and it's not a lot of money.
Okay.
But a company could have a long-term disability plan. You've got to make
Okay.
sure that that long-term disability plan works for you. If you're someone that gets bonuses or commissions and you live like that, and you may have a smaller salary, that may be based on your smaller salary and not include your bonuses or commissions.
Okay, so it's not an accurate picture.
So you've got to see an accurate picture of that, right?
Right.
So what I do basically with people like that, I will review that and see what it is, see what the holes are, and then we'll build upon that and maybe just add a little piece to it. So now they've got a nice balance. They have what the company gives them, and they have something that they pay for themselves, that if something happens, they've got a good balance.
Yeah, and I don't know if you guys caught that. If you understand what he's saying that, look, the company is going to have something in place, but you need to protect yourself.
Right.
You can't just rely on the company to take care of everything for you. You need to make sure that the individual, you personally, are doing everything you can to make sure you're protected.
Exactly. I mean, it's really a fundamental step that everyone has to take, and working with a qualified financial advisor will help you understand those processes. Okay?
Yeah.
And then if you take a look at that and you say, okay, I work for a company and it has a 401k, is there a match? Well, you want to maximize that match.
Right.
That's a freebie. Take it every time. That's wonderful. Do it.
Right.
Okay. And then where people get a little crazy is that, well, I think I'm going to open up a Schwab or a TD America, whatever case. Now I'm going to invest in stocks.
Right.
All right. Well, my advice then is really look at the mutual funds, because if you buy the Googles, you're buying them after everybody else has made their money.
Exactly.
You know, you're buying at the top of the market. You're always best to sit back, hold your cash, and wait till the market says, oh, it's horrible, it's going down, it's at the bottom, what's going to happen, and then get into the market.
Right. Right.
All right. You want to be the guy like the rich guy. How's the guy get rich? He buys at the bottom,
Buys low
and
sells high.
Right.
Right.
It gets up there. So you want to look at the market like that. Is it good to get in the market right now? Be honest with you, I can't tell you. I mean, it's like going to Vegas. What are the dice going to say? What's the cards going to say? You can't predict that kind of stuff.
Right.
You've got to basically use your own common sense and say, what can I afford to do? What kind of chance can I take? If I can't take a chance on that, then maybe putting extra money in your life insurance policy, letting that build up at a guaranteed rate of maybe 3 or 4% interest, which is better than bonds.
Right.
All right. Let that accumulate, and then when the market takes that dip, and everyone says, "Oh, you should be buying now," then get in. So you want to measure these things.
Yeah, I mean, really, the bottom line is really just get in touch with Joe, and he'll guide you through all that stuff. But what we're talking about is kind of an uncertainty, right? You're saying like, all right, you have clients that come in and they're like, look, we need to get in the stock market, right? I hear the market is good, people are making money. How do I get a piece of that? And really, what you're saying is pump the brakes a little bit, because we just did have an election very recently, and yeah, we saw the market. I never remember them covering market trends during the election coverage. This was something different that I had never remembered seeing before, but there was so much movement in the market overnight and in the foreign markets that it was causing the experts to be like, well, wait a second, we don't normally see these spikes up and down during the election process. But what it does is lend to a few months leading up to the inauguration, and then after the inauguration, there's going to be a little bit more time of uncertainty. So you're saying everybody just kind of chill out for a minute and let's see how this plays out.
Yeah, I would advise on caution at this point in time. All right.
Okay.
You want to see, as you pointed out, how things kind of travel as we get closer to the inauguration, and how the new president puts whatever policy he's going to put in place, and whoever he puts in place. See the confidence in the market. My guess is that if they start to raise interest rates, obviously you have an effect on stocks, so you're going to see what that's going to be. And you have to also take a look at what effect the tax reductions are going to be on businesses. All right?
Okay.
So these are things that are going to tweak the market. Be prepared. Save your money.
Right.
One of the things that we really try to impress upon someone is that you should be trying to save 15 to 20% of whatever you make.
Oof.
It's hard.
That's a big number.
It's hard to do.
Yeah.
So what we do is we sit down and we have some tools that we use. All right. One of the tools we use is something called a living balance sheet.
Okay.
And what this is an incredible tool. You're able to take all the things that you do if you have a Schwab account or TD or any kind of checking account, and load the information into this, and it updates daily for you, and it shows you all your positions.
Okay.
But it also allows you to do what-if scenarios. So if I save 10% of what I'm making right now, how does it affect my mortgage, my car payment, all my insurance?
Oh, it'll adjust all the numbers for you?
Adjust all the numbers for you. So now
that's awesome.
You can get an idea of what's going on, and then you can say, well, you know, I've been saving for a vacation. Should I save 6% or 8%? Well, the vacation is going to cost X amount of dollars. Oh, I know I have to save this much money. Well, I got to take some money that I'm spending over here, maybe on my movies or whatever,
right,
and redeploy it. But it helps you plan what you're going to be doing.
Yeah, I mean, and that sounds like, look, there's people, they crunch themselves. They try to save the wrong way. They put themselves in positions like, all right, they see the vacation is coming and they need X amount of dollars, and then they're like, well, we got to do this, we got to do that, and they start making these huge sweeping changes for the short term that don't necessarily get them to where they have to go.
Nope.
This sounds like an amazing scenario, an amazing tool to be able to kind of project out and be like, look, you know, I had my last vacation. I'm going away next month, but I had this thing planned months ago. That if I would have been able to plug my information into this tool, you're telling me I would have been able to feel less of an impact on my bottom line as I was doing the right thing and saving for my vacation.
It's called stress relief.
Yeah.
You see it in front of you. All right. You're able to deal with it. All right. And these are important things to do as you go through life so that you have an idea. You actually can take this tool and use it to help see exactly how your retirement's going to end up based upon what you're doing right now.
Okay.
This is probably one of the most, I think, intuitive things you could do to help yourself.
Right.
All right. And what I do is with a client, when I meet with them for the first time and we talk, I send a tool out to them. I pay for it. I give it to them.
Nice.
Here, you use it. Let's get this stuff in. And what's interesting is the information they put in there is all encrypted and private. There's no one can access it.
It's very secure.
Very
it's
secure.
Not, right.
I can see certain things that they want me to see to make recommendations on what they can do. So it's a proactive tool that we can use together moving forward.
Yeah, that's really, really cool.
All right. These are the types of things that help people get to where they want to go.
Yeah, and I think that more people need to know that they're out there and available for them, and that's kind of like where the disconnect is that I bet you there's a huge group of people, they don't even know that stuff is available to them, and that's why they need to call you, and they need to talk to you about that, because you're going to bridge that gap, whether it's information, whether it's this tool that's going to be able to help you save your money. Joe is the one that's going to be able to help you do that. So again, I'm going to give you a quick phone number, all right? It's 856-206-2733. And then, again, we're on the internet. So open up another tab, open up your email browser, and type in Joseph_McCarrie at Devon-financial.com. And if you go to Devon-financial.com, and that's that little dash in the middle, right? If you go there, you're going to learn about the big parent company that Joe works for. These guys are great. They offer so many different financial services. It really is a cool place. So you want to go check that out. But get in touch with Joe. It's important because He's gonna help you understand your financial situation a little bit clearer. And once you understand it a little bit clearer, you're gonna have a better path to making more money. And that's obviously the bottom line. So here's what I gotta do, Joe. We're gonna take another quick break.
Sure.
And then we're gonna come back. We're gonna put it in a nice little box. We're gonna wrap it up. We're gonna polish it, and then we're gonna ship it off because this is great stuff. All right. So you're gonna stay right there. Don't go anywhere. We're gonna be right back here on Morning Coffee on the Radio Vision Network. Stick around.
When it's time for Jersey Mike's to give a sub some sizzle, this is the way. The way it's always been. The way it always should be. The way it always will be. Because that's just the way it's supposed to be. Jersey Mike's. Be a sub above.
My dream job is to run and manage my own spa one day.
To be the general manager for the Jumeirah Hotel in Abu Dhabi, Dubai.
I feel that Mercier has prepared me very well for my future in the hospitality industry.
The kitchen is incredible.
You are planning the meal, doing all the costing and the recipes. You're in charge of everything going on in the kitchen.
They really do get you prepared, and they want to make sure that you have a job after college.
When it comes to injuries,
They're not all created equal.
that's why at Performance Spine and Sports Medicine,
Our team of doctors will coordinate and customize your care,
to provide the best treatment options using the area's most advanced medical technology,
all with one goal in mind.
to get you back in the game,
We call life
pain-free,
drug-free.
surgery-free. That's what we do here at Performance Spine and Sports Medicine.
Get better faster.
Stay better longer.
Saving your business money is as easy as 1, 2, 3. Tanker Consulting Services, a payment solutions expert, will show you how with a free, detailed, written analysis illustrating your cost savings. We usually uncover savings between 10 and 25%, and sometimes more. We can help your business succeed by providing reliable and secure merchant payment solutions such as merchant services programs, point-of-sale systems, and ATM machines. TCS, one of the leaders in regional credit card processing consulting, offers electronic payments to merchants locally and nationwide through our preferred vendor programs. We work to keep business costs down with a comprehensive suite of quality products, services, and customized credit card processing programs exclusively tailored for your company. TCS is convenient, reliable, and innovative, with customer service available 24/7, 365 days a year. Our in-depth industry knowledge, partnership strategy, and innovative processing solutions allow for a specialized approach to providing merchant bank processing with 100% full fee disclosure. TCS is one-stop shopping for all your merchant services solutions. Our clients save money 100% of the time. Trust Tanker Consulting Services, the knowledgeable, professional, and friendly provider of secure payment services. We set the standard by which others are measured. Call now for a free written analysis. 609-922-0201.
Today's show has been sponsored by More Than Gifts. Come see our new location in Marlton, New Jersey. Not just gifts, but more.
Welcome back to Morning Coffee, everybody. Right here on the Radio Vision Network. But of course, you already knew that. And we're just wrapping up here. We're talking to Joseph McCarrie, and he's a financial advisor. And he's the financial advisor that you need to get in touch with because he has brought such great information. And Joe, we were talking kind of before we left a little bit about how people can really kind of protect themselves a little bit more than they're used to, and really being a little bit more mindful of how you can protect your wealth and your financial management and all that stuff. But, you know, we focused on the individual in that last segment. And I was wondering, because we had talked about it earlier, that you do a lot of corporate work. I mean, does this translate to the business side as well? Or
Yes, it does. The business community can take advantage of something which is actually had a kind of a black mark on it for a long time. That's called a captive insurance solution.
A captive insurance solution.
Yeah, and basically it's setting up your own captive insurance company.
Okay.
All right? So let's look at it like this, okay? And we'll use an example of a doctor. A successful doctor has a practice, all right, and he makes X amount of dollars per year, all right, and at the end of the year, you know, he's sitting there and he's going to have a tax bill of maybe 45% on what he has sitting in that pot at the end of the year, right? Well, what he can do is he can take at a minimum 200,000, and you can go up to right now 1.2 million, and in 2017 it goes up to, I believe, $2.2 million, and create a captive insurance company. Now, this is the way it works. You take the money, 200 or the $1 million, and it goes into this insurance company.
Okay.
Right? And that insurance company will pay claims on things that are a little bit off the wall in sense. For instance, if it's a doctor, it could be a HIPAA violation. All right, because his property and casualty insurance isn't going to handle that.
Okay.
But he still has to address it.
Right.
All right. See, things happen.
That's right. Yes, unexpected things happen. You got to be ready for anything.
You got to be ready for everything.
That's
right.
right.
It's one of those things, right?
Yeah.
So what happens now is you have a doctor who may have that HIPAA violation. He could have someone steal money. He could have someone steal data from him. Okay?
Right.
Well, these are things he'll have to take care of. Or they could write a complaint about him that now he has to hire someone to deal with that complaint.
Right.
Well, how do you deal with this? Where does the money come from to deal with this? Well, the captive insurance company, basically, you can have a claim against that captive for those types of things.
Okay,
right?
so it basically is insurance that doesn't cover the rest of the things.
The rest of the things that you may have.
Right.
Now, here's the interesting part about it. The money that goes in there and sits there, it sits there for that year that you've got this stuff going on.
Mm-hmm.
At the end of the year, that money can be paid out in smaller increments and a dividend at capital gains rates. So instead of you getting hit over here where you had that money sitting back,
right,
to pay those things and maybe a 45% tax rate, now it's coming out at a 15% tax rate.
Wow, because you've set up another
captive insurance.
A captive
company.
insurance.
And because it's a captive insurance company, that's how they distribute the money at a capital tax rate.
All right. So if there are any businesses out there that aren't taking advantage of this, you need to call Joe right now. Right?
Yeah. This is a big deal for businesses.
Yeah.
This is a great opportunity for businesses. And some people actually use these in trust and other things. Now, one thing I will say, we only use companies that are U.S. based. We don't use anything offshore. When they had the offshore issues,
that's important. That's great.
There were issues about how to do things. You have to pay claims. That's very important. Make sure that it's a legitimate insurance company.
Right.
We do everything under a rule of compliance to make sure that we do the thing right.
Right.
We follow all the IRS rules. So it's not way. It used to be a little bit shaky. And
right.
We've heard things about that.
Yeah, but they've tightened that up.
But that's all been tightened up.
Yeah.
And right now, so doctors, lawyers, businesses can take advantage of this, and they should be taking advantage.
Well, it really, honestly, I think that they had to clean it up because it's such a good program. It makes so much sense to give an extra layer of protection for things that don't fall into your traditional insurance categories,
Absolutely.
right? Because you talk about, we'll use the doctor, okay? We'll use the doctor as the example. So he's got different things that fall under his insurance, okay? And then he's got other things that fall under, like, the malpractice insurance, right? But there is so many items, and you talked about a few of them, that don't fall under either one.
Right.
So this basically adds another layer of protection, but the cool thing about it is that it's almost a reserve. It's almost a reserve amount of money that you can pull out of as you near the end of the year.
It has to stay in there for a whole year.
Okay.
And at the end of the year, you can take a dividend distribution. Okay. And when that comes out, that's going to come out of the capital gains rate instead of, if that money sat in your corporate account, you're paying 45%.
Just paying like the taxes off the top, basically.
Right. Exactly. So you have a tax advantage here as well as an insurance advantage, and it just makes sense for someone who's successful, has a business that may have some of these issues, and there's a whole list of items that are focused on individual businesses. So if it's a medical doctor, there are things there. If it's a manufacturing firm, we have things there that you can claim. So we help.
All different categories, and that's kind of like a good thing to mention is that any type of business, he's going to be able to figure out where it fits, where it's going to be able to work. I mean, that's that's kind of the beauty of this. Joe, I can't even believe this. This went so fast.
Yes, it did.
You're just going to have to come back, and we're going to have to talk a little bit more about all this stuff. But for right now, what I'd like you to do, and I want everybody out there to pay attention, because you got to get in touch with Joe and learn more about this. Look, it's important, and I know you've got tons of stuff on your mind. It's the holidays and all that. Thanksgiving, I can't even believe it, is like right around the corner. But look, your wealth and your money and your financial planning is important, and you need to get in touch with Joe. And Joe, you're going to tell everybody right now. I want you to look into that camera right there and tell everybody how to get in touch with you.
My cell phone is always the best way. I believe this is a personal business, and I think that when I first started in the home care business, because that's a personal business, we didn't use voicemail. If you needed to get a hold of my wife, she'd answer the phone all the time. So just call my cell phone, 856-206-2733, or send me an email, and we can communicate like that and set a date up in the next 2 or 3 weeks where we can sit down and discuss your specific needs and see if I can help you in any way. Thank you again for tuning in today.
Yeah, that was great, Joe. Thank you so much. I really appreciate it. Listen, give him a call. He's just a nice person. So that's kind of the biggest thing, and I'm very lucky because I get to talk to a lot of different people, but I get a good feeling from you, so I just encourage people to go just talk to him. He's not going to give you the hard sell. If he can help you, he will. If he can't, he'll probably point you in the direction of somebody who can. I know that I just get that good feeling from you. So look, check him out. He's Joe McCarrie. He's from Devon Financial Partners, but really, I want you to get in touch with him personally, and I'm going to give you the cell phone number again one more time, 856-206-2733. This was great, Joe. Thank you again. I appreciate it. I appreciate spending a few minutes with you. Thank you for coming in. I got to take another quick break here on Morning Coffee, but we still got plenty of stuff lined up for you this morning. So you're not going to go anywhere. You're going to stay right there on the Radio Vision Network. We'll be right back.
When it's time for Jersey Mike's to give a sub some sizzle, this is the way. The way it's always been.